I have spent more than 50 years studying the rise and fall of empires. I have sat with presidents and prime ministers. I have watched currencies collapse and entire economies unravel overnight. What I am about to share with you is not a theory, it is not a guess, and it is certainly not a politically correct observation meant to soothe your anxieties about the future. It is a brutal, undeniable historical reality, a pattern that has repeated itself over and over again for the last 500 years. And it is happening right now, right before our very eyes, with terrifying speed and precision. Most people are walking blindly into a financial slaughterhouse, completely unaware that the ground beneath their feet is already crumbling, holding on to the naive belief that the systems, the institutions, and the currencies that protected them in the past will somehow magically protect them in the future. They will not. We are standing on the precipice of a monumental shift, a radical restructuring of the global world order, and the transition will be marked by devastation for those who are unprepared and unprecedented opportunity for those who understand the mechanics of what is truly unfolding. You must understand that history is not just a series of random events. It is a meticulously repeating cycle of debt, conflict, and currency debasement. When you look back at the Dutch Empire and the guilder, the British Empire and the pound sterling, and now the American Empire and the US dollar, the trajectory is identical, the arrogance is identical, and the ultimate devastating conclusion is identical. We have reached the final stages of the classic long-term debt cycle, a perilous phase where the burdens of borrowing have vastly outpaced the actual productive capacity of the economy, forcing central banks into a corner where their only remaining weapon is the relentless, destructive printing of fiat currencies. This is not just a domestic issue, it is the ignition switch for a global capital war. Capital wars do not begin with the firing of bullets or the dropping of bombs. They begin quietly, insidiously, in the dark corridors of central banks and finance ministries. They begin with tariffs, with economic sanctions, with the weaponization of reserve currencies, and with the aggressive freezing of sovereign assets. When a nation weaponizes its currency, as we have seen with the US dollar, it shatters the bedrock of global trust, prompting every other nation on earth to realize they are fundamentally vulnerable and must desperately seek alternatives to protect their wealth from sudden confiscation or catastrophic devaluation. This loss of trust accelerates the unraveling of the dominant financial system, turning what was once considered an invincible economic fortress into a fragile house of cards ready to collapse under the slightest gust of geopolitical wind. You are living through the unraveling. You are witnessing the death throes of a monetary regime that has dominated the world since the Bretton Woods Agreement, and the transition out of this regime will wipe out the life savings, the retirement accounts, and the purchasing power of millions of ordinary citizens who mistakenly believe that holding cash or traditional paper assets is a safe harbor. It is not a safe harbor, it is a burning building, and the exits are rapidly being locked. The financial media will not tell you this. The government will certainly not tell you this. They rely on your blindness, your complacency, and your misplaced trust to keep the system functioning just a little bit longer, while the smart money, the sovereign wealth funds, the central banks, and the global elite quietly, urgently position themselves for the inevitable crash. They are executing a profound rotation of capital, moving trillions of dollars out of vulnerable fiat instruments and into a highly specific finite set of assets that possess the inherent strength to withstand the coming storm. There is a profound difference between the prepared and the unprepared, an us versus them dynamic that will define the next decade of human history. The unprepared will rely on hope, the prepared will rely on history. The unprepared will be brutally wiped out by the invisible tax of inflation and the total collapse of counterparty promises. The prepared will survive and even thrive because they took the necessary steps to radicalize their portfolios before the panic set in. You must recognize that the traditional 60-40 portfolio of stocks and bonds, the very foundation of modern retirement planning, is a relic of a bygone era, a dangerously obsolete strategy that was designed for a period of declining interest rates and geopolitical stability that no longer exists. We have entered a new paradigm, a period of structural inflation, deep geopolitical conflict, and massive currency devaluation. In this new paradigm, there are only 4 investments that will survive the devastation of the coming capital war. 4 specific pillars of financial survival that you must urgently integrate into your wealth protection strategy. The first of these investments is physical gold. I do not mean paper gold, I do not mean gold exchange traded funds, and I do not mean mining stocks. I mean allocated physical gold bullion. For thousands of years, across every continent and every civilization, gold has served as the ultimate, undisputed store of value, the only financial asset that is not simultaneously someone else's liability. In a world drowning in counterparty risk, where every bank deposit, every bond, and every derivative contract depends entirely on the promise of another institution remaining solvent, physical gold stands alone as an asset that requires no one's promise to retain its value. When the trust in fiat currencies evaporates, when the digital screens flash red and the banking systems freeze, gold is the only universally recognized money that cannot be printed, digitized, or artificially multiplied by a central bank. Look at the data. Look at what the smartest institutions in the world are doing right now. Central banks, particularly those in the East, are accumulating physical gold at a record, frantic pace, hoarding thousands of tons of the metal in a clear, undeniable preparation for a post-dollar world. They remember 1971, when the United States suddenly and unilaterally severed the dollar's final link to gold, setting off a decade of crippling inflation and economic stagnation. Since that moment, gold has provided a massive return, preserving purchasing power while paper currencies have steadily marched toward their intrinsic value of zero. If you do not own physical gold in this environment, you are effectively declaring that you trust the politicians and the central bankers to manage your wealth better than thousands of years of recorded human history. That is a devastatingly dangerous gamble. You must hold gold to protect yourself from the catastrophic devaluation of fiat currencies that is mathematically guaranteed by the current levels of global sovereign debt. The second investment you must urgently secure is inflation-indexed bonds. While traditional bonds are a guaranteed death sentence for your purchasing power in a high inflation environment, inflation-indexed bonds, such as Treasury inflation-protected securities, are specifically engineered to adjust their principal value in direct proportion to the rising cost of living. You have to understand the insidious, quiet mechanics of inflation. It is a silent tax, a stealthy confiscation of your wealth, orchestrated by governments that are drowning in debt and desperate to inflate their way out of their obligations. When governments cannot pay back what they owe with hard money, they simply print more money, expanding the currency supply and diluting the value of every single dollar in your pocket. This causes nominal interest rates to lag severely behind the actual real-world rate of inflation, resulting in deeply negative real returns for anyone holding traditional fixed income assets. You might think you are earning a safe 4 or 5% yield, but if the true rate of inflation is running at 8, 10, or 12%, you are bleeding wealth every single day, slowly being bled dry by the very system you thought was keeping you safe. Inflation-indexed bonds offer a crucial, necessary shield against this stealth confiscation. They ensure that as the government aggressively debases the currency to manage its crippling debt loads, the foundational value of your investment automatically scales upward, preserving your real purchasing power and keeping you from falling behind the escalating cost of goods, services, and energy. This is not about getting rich. This is about basic, fundamental survival in an economic environment where the value of money is being intentionally and systematically destroyed. By holding inflation-indexed bonds, You are effectively forcing the government to compensate you for the inflation they are actively creating, turning their weapon of currency debasement into a mechanism for your own financial preservation. The third investment strategy is not a single asset, but a vital methodology: geographic and asset class diversification, specifically heavily weighted toward hard assets, commodities, and even tangible stores of value like fine art. When a nation enters the terminal phase of its economic dominance, it does not just experience financial turmoil, it experiences deep, tearing social and political polarization, leading to unpredictable, radical shifts in taxation, regulation, and capital controls. If all of your wealth is tied up in a single country, in a single currency, and in a single heavily regulated banking system, you are a sitting duck. You are entirely at the mercy of whatever desperate measures a failing government decides to implement to keep itself afloat. You must diversify your capital across multiple geographic jurisdictions, moving wealth into countries that have strong balance sheets, stable political environments, and a clear respect for property rights. Furthermore, you must aggressively acquire hard, tangible assets that cannot be printed or easily confiscated. I am talking about productive agricultural land, industrial metals, energy infrastructure, and strategic real estate. These are the physical building blocks of the global economy, the vital resources that human beings will always need, regardless of what happens to the paper value of the US dollar or the euro. In times of severe currency crisis, wealth does not simply vanish, it transfers. It transfers violently and rapidly from those holding paper promises to those holding tangible reality. Even fine art, historically the domain of the ultra-wealthy, serves as a powerful non-correlated store of value that transcends borders and retains its premium in the face of hyperinflation. When you own high-quality hard assets, you are anchoring your wealth to the physical reality of human necessity, insulating yourself from the digital illusions and paper manipulations of the traditional financial system. You are building a fortress of tangible value that can weather the storm of a collapsing fiat regime. The fourth and final investment pillar is perhaps the most critical for navigating the sheer volatility of the coming years: radical diversification through uncorrelated return streams. The fatal flaw of the average investor's mindset is the assumption that because stocks and bonds have historically balanced each other out, they will continue to do so in the future. This is a catastrophic miscalculation. In a severe inflation-driven capital war, both equities and traditional fixed-income assets will collapse simultaneously, precisely because they are both highly sensitive to rising interest rates and contracting liquidity. To survive, you must seek out and integrate return streams that have absolutely zero correlation to the broader macroeconomic environment. This means looking toward macro hedge fund strategies, trend-following managed futures, private credit, and specialized sectors, and absolute return vehicles that are designed to generate positive yields, whether the global economy is booming or crashing. You must think like the world's most sophisticated sovereign wealth funds, which construct their portfolios not based on the hope of a rising stock market, but on the mathematical certainty of balanced risk parity. By combining assets that react differently to various economic shocks, some thriving in inflation, some thriving in deflation, some thriving in periods of rising growth, and some thriving in periods of rapid economic contraction, you create an all-weather financial vehicle that is practically impervious to the unpredictable shocks of a global capital war. This level of radical diversification requires stepping outside of your comfort zone, abandoning the simplified, spoon-fed investment narratives propagated by mainstream financial advisors, and embracing the complex mathematical reality of true wealth preservation. You must build a portfolio that does not rely on a single central bank, a single government, or a single economic outcome to survive. The danger is not a distant theoretical possibility. The danger is a present unfolding reality. The capital war is already happening. The battle lines have been drawn. The The initial shots have been fired through sanctions and currency manipulations, and the global financial architecture is already beginning to aggressively fracture. The arrogance of the West, the blind faith in the eternal supremacy of the US dollar is blinding people to the devastating mathematical truth of our current debt trajectory. The system is breaking under its own immense weight, and the safe assets of the past are guaranteed to become the toxic liabilities of the future. You cannot afford to wait for the mainstream media to announce that the collapse has arrived. By the time it is on the evening news, your wealth will have already been decimated. You have to look at the historical precedents, you have to look at the undeniable data, and you have to take decisive, uncompromising action to protect yourself and your family. Transitioning your wealth into physical gold, inflation-indexed bonds, geographically diversified hard assets, and uncorrelated return streams is not a pessimistic bet against the future. It is a highly rational, historically proven strategy for ensuring that your capital survives the transition from one world order to the next. The individuals who study history, who recognize the patterns, and who have the courage to act before the herd are the ones who will emerge from this crisis not just intact, but significantly wealthier and more powerful. The vast majority of people will simply freeze, paralyzed by fear and confusion, hoping that if they just hold on a little longer, everything will eventually return to normal. It will not return to normal. The old normal is dead, mathematically destroyed by decades of reckless money printing and unsustainable debt accumulation. We are entering a period of profound financial violence, a time when the invisible hand of the market will brutally punish those who ignored the warnings and ruthlessly reward those who prepared. You must strip away your biases, you must ignore the comforting lies of the establishment, and you must ruthlessly audit your exposure to the failing fiat system. Every day that you leave your wealth parked in traditional vulnerable assets is another day that you are exposing yourself to the total, devastating loss of everything you have worked your entire life to build. The transition is accelerating, the global geopolitical landscape is fracturing at a terrifying pace, and the window of opportunity to position yourself ahead of the absolute chaos is rapidly, definitively closing. You have the knowledge, you have the historical blueprint, and you now have the exact 4 investments required to shield your wealth from the coming devastation. The window is open, the pattern is clear. The time to act is before the storm, not during it. I have seen what happens to those who wait, and I am telling you, do not wait.